All right, hi everyone. This is my first shitcoin pump and dump video, and I'm going to share some information on the current crypto coin that I have, which is the Elon DOGELON or DOGELON or DOGELON. I have no idea how to pronounce it, but either way, we don't care. All we care about is buying low, selling high. So, yeah, this is my first shitcoin that I bought, and I'm going to try to pump it somehow in some form. Any amount of pump is adds up in the end. But I'm going to talk about the reason why I got into it, and then talk about what I think is going to be the top. Obviously, I would like to see it go up 100 to 1000x, but we have to be realistic. And also talk about some of the unrealistic things we can do in terms of managing risk, which is basically assume the initial investment goes to zero. Just before I begin, I have no idea about crypto. This is my first crypto. I don't really care about crypto. Maybe I'll buy some when I complete my own personal goals in life. But right now, I want to be part of this shitcoin craze because it's fun. What I'm good at is I'm good at creating systems that make money. I have all these types of systems that are doing fabulous, but at the same time, they do take some time to mature and to get to where they need to get in the later years. But anyways, DOGELON here, I think what I've pinned last week, let's go to that pin. So I've typed here, this is my first shitcoin that I bought October 28th. It's about $1,000 worth. So that was October 28th, would have been right here, exactly at that at the point where it breaks through that yellow D. And we talk about this strategy quite a lot. I actually was thinking about getting into it on this point right here, also here. But I wasn't really sure about what this coin is all about. So then on the 28th, what I did was I just basically said, yeah, no one knows what this coin is and really what its utility is. So I just pulled the trigger and bought it. But there was not only that reason. I also looked at market cap comparisons. So I think this coin is, oh, it's way down there. I gotta use a search to just find it. Okay, it's ranked 10th with a 34. Looks like a 34. Oh, that's Dogecoin. Doge. That's 34 billion. Okay, here we go. So this one's at 1 billion market cap. So I figured that if anything has the same name as a Doge, then there could be some upside that can be capitalized on. Also, the magnitude of the market cap can be equal to or greater than the market cap of Doge, which is 34 billion. So I guess you got upside here. So those are some of the reasons why I got into it. Technical wise, I just assumed that this was a cup and handle pattern. And then on the weekly, we had a Darvis channel actually that was generated here. So that was an easy risk and reward assumption. So did I know that I was going to make 100% on the second day or the first day? I didn't, but I was expecting at least a retest of this triple top attempt. And usually triple tops, they don't break out the first attempt. So you will have to wait and see how the handle forms. And the handle could form at a 618 retracement back to, what is that? How many zeros is that? 2, 4, 6 zeros, 158. So around here, this is where the maximum retracement would likely occur. A high and tight retracement would be a 0.786 retracement, which would be about a 0.2 about 20%, less than 20% retracement, 0.2, 60193. That's where I would say the high and tight candle would be. So what that means is that after it reaches the tops here, and it breaks out here, so it's making higher highs, which is good. And then on top of that, the higher highs is coming on with reasonable volume. So unfortunately, it doesn't look like it actually did come out. Yeah, so the volume here is a lot higher than the volume here. So that's a bit of a problem after making a high. So we got some sort of diverging pattern. But anyways, that diverging pattern is supporting the case where it's going to pull back and form the handle. Okay, so this is one big cup and handle. Okay. So the pullback here of 5, I think it was down as much as 20%. Let's see how much I'm up by from the 28th from here. So after breaking out of that daily Darvis channel and moving up as high as, so I'm up about 166%. So as long as it's like trading above these 6 zeros, how many zeros again? Man, it's just hard to tell. 1, 2, my monitors are so big. 1, 2, 3, 4, 5 zeros, 208. As long as it kind of holds this retracement level, then I can assume that the cup and handle on the weekly is under development. And then when it breaks out, that's where you're going to have to figure out how high this thing's going to go. And basically, when you're getting chased after a bear and you're with your friend, you just have to make sure you run faster than your friend, which basically means you got to take profit before it starts pulling back. So let me get rid of all this and then use a Fibonacci extension, assuming some sort of low was made here, and then the top was obviously the breakout level here will be that Darvis channel. And then the highest it can go if it really builds momentum, which could be coming in the next 2 to 3 months in a very bullish season. So we got November, which kicks off Christmas rally, and then we got the official Christmas rally that starts in December, and then January effect, and then after earnings, then things can get a little bit tricky. So in the next 3 months, we are in a period in the market where money is being put into the market, risk is on. So that also helps with holding this shitcoin for another 3 months or more. Okay, so when we think about, when you use this Fibonacci extension and we use all these targets to manage risk, and keep in mind, I think there's these gas fees or commission fees that you have to be aware of. You can't be just, I don't think it's like options. You can't just be, it's almost like options, but the nice thing here is there's no theta decay, so we can just hodl this as long as we are alive, and realize the maximum profit that we can see from this investment. And one hopeful target would be this 4.01056. Okay, that's the 4.236 extension, which is essentially like a 4 standard deviation move, which is common in a crypto. So that's your hopeful target, and anything above that, I don't know. So that is the target that you want to be looking to close at least more than 80% of your coins at 4.01056. Now this is a weekly chart, and you can see that actually the weekly chart has just been trading sideways for the past 210 days, actually 182 days, which is done nothing basically. A lot of pain from the early inception, and then huge accumulation. All these dojis kind of looking like buyers and sellers were, in this trade for quite some time from the very beginning. And then now we're about on the verge of breaking out. And then if we do get the breakout, I've seen it move up to this type of pattern, move up to 2.618 in Tesla. So this is a stock that has some Tesla DNA in it, obviously because of the name and popularity of the name, along with Doge and the sponsorship of Elon Musk in Doge. So there is that DNA type of move that can be witnessed in DOGELON or DOGELON on this breakout. So breakout would happen when it pierces through this top of this channel, and then obviously however high it goes is going to be based on whatever catalyst starts to come out as price starts to ascend. Now, market cap with Dogecoin is, I don't know if it's we can make the assumption that the Dogecoin and DOGELON or DOGELON is exactly the same thing. I think they're more of a apples to orange comparison. Don't know if we can make that assumption, but if we do make that assumption, right, you're going to have some sort of idea that that's not going to be exactly the case, but where it reaches the same market cap as Dogecoin. But let's say it goes 30x from here, right? Then probably a couple zeros gets taken off. So maybe around 2.618. That's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 5 zeros. 6584, which is a 2.618. That extension is a target where you definitely want to look to take some profit and try to get back in. Managed profit at around 70%. So if we break through and it just starts to hustle up to this level, and you got, I don't know, 100 million, I have 650 million coins, you want to close off or manage about, aggressive would be 50%. So that would be, not only you get back your initial investment, but you also have some profit with 50% skin in the game. Or you can just use a different distribution, like 80%, close off 80%, which is conservative, and keep 20% in there for the next move up if it goes up to a penny or a dollar. Right? So these targets here are just used to kind of help you understand and help you make decisions on where you think and what you will do when these prices are met at that time, and you kind of be scrambling to figure out what you want to do. You want to know that in advance. 50% is very aggressive, and so that would be at the 2.618. Conservative, I guess this kind of depends on what you mean by aggressive, right? Aggressively bullish, then if you're aggressively bullish, then I guess you wouldn't close anything, right? You'd probably go into a dollar cost average into it type of mode. That's super aggressive, right? So on every dip, you would just keep on buying. But and that's not managing risk, right? That's super aggressive. But if you're managing risk, an aggressive approach would be to, if you're bullish, is to close half at 2.618. And then if you're conservative, then and you're happy with those profits, then you can use a 70-30 or 60-40, whatever. There's no answer to how you're going to manage, what kind of distribution you can use to manage your risk once it gets there. Okay, so just just giving everybody some ideas on what this 2.618 means. And then obviously with the hope factor moving up to a 4.236 extension, which kills a couple more zeros, that's the reward you get on the managed risk. So whether it's 50% left or 20% left, that's what you get rewarded with. And that could be a huge. And then will it go up to a penny? Yeah, so that I don't know if that can happen. Even if Bitcoin runs up to like 100,000 to 200,000, maybe it can. I just don't know. Nobody would know other than the people who believe that it can get to that target. So what that means is once you've covered your position here using whatever approach you want, whether it's dollar cost averaging into it, closing half, 80%, whatever, right? Then essentially you're just holding that thing for 5-10 years and see what happens. There's no other answer behind it. Okay, it's always important to kind of cover, get back your initial investment plus some profit, and then whatever happens with that, you don't really want to think about it too much. You want to use that money that you capitalized on at the 2.618, and then look for some other shitcoin to invest in and see if you can do the same thing with it. This pattern here is a very popular pattern we talk about in the channel. Subscribe to the YouTube channel so I can maybe feel motivated to make more shitcoin pump and dump videos. But yeah, this is a pattern that you can use to actively trade crypto if you have good, if you're comfortable with that. This is a pattern that is looking like it's going to break out to one of these extensions in the near future. All right, so thank you very much and have a great day.